A very good morning, and yes, wish you a very happy day. As usual, let's continue with the academic work in a fine monsoon morning. We saw that lucky number question number 13 in our last session. Today, this one is question number 14. Okay? I can say the last question before we start a new topic. The last question before we start a new topic. That new topic is a very interesting one that is connected with closing capital of the partners. Okay, from question 15 onwards, we are going to do that kind of questions, no doubt. Question 15 is a short question, but from 16 onwards, again in the long question of admission, with all such formats of revaluation, capital, sometimes even current, cash on hand and balance sheet. Okay, with all these formats, you have to go through the answers with closing capital topic. So do take care. Till this topic, we have not covered a closing capital point. Okay? Let's continue. As usual, first of all, go through the question and do proper tick marks. Rutvi and Princey are the partners, sharing profit and loss in the ratio of 5:3. So old P&L ratio is already given. Naturally, it must be. The balance sheet of their firm as on 31/3/17 was as under. Workman profit sharing fund, creditors. See, in the beginning, instead of giving capital, they give workman profit sharing and creditors and other things. So creditors, then workman compensation reserve, take care. Workman profit sharing fund as well as workman compensation reserve. Both the things are very clearly given. Current account of Rutvi and Princey, capital account of Rutvi and Princey. Then from the asset side, bank, debtor, stock, building, investment. Nothing new. Old goodwill is not given. From the adjustments, first, Manan will bring his personal furniture of 75,000, personal furniture of 75,000 as capital. See, in this question, some very good adjustments are done. Here, instead of bringing cash, Manan is bringing furniture as capital, and furniture is not given in the balance sheet. So I can say that Manan, whenever the new partner Manan brought in the business that furniture, it is indirectly increasing asset. Okay? So do have a tick mark, self-ticked obviously, because furniture is not there in the balance sheet. If it is, you have to tick over there. Out of creditors, 60,000 are payable to Manan, which is to be transferred to his capital account. Creditors, 60,000 payable to Manan. Now we are not going to pay to Manan. Why? Because he is now no more creditor, but a partner of the firm. So we are not going to pay that 60,000 to Manan, and will be adjusted in his capital. Then, so second adjustment you can do, tick mark in creditors. Third one, Manan will be given 1/5 share in future. Here no new P&L ratio is given. So even other information is not given. So no need to find its sacrifice ratio. Okay? So third itself. Fourth, Manan will bring 45,000 as goodwill in cash. Manan will bring 45,000 goodwill in cash. Again itself. Fifth, goodwill of the firm is valued at 3 lakh. Now we already sold this kind of topic. Whenever new partner brought goodwill in cash, at the same time, if total goodwill is given in the equation, again listen carefully, whenever new partner brought goodwill in cash and even total goodwill of firm is given in the adjustment, at that time normally partial goodwill topic will be there. For example, let's use calculator. Here the total value of goodwill is 3 lakh rupees. Okay? Manan's share is 1/5. Even you can do orally also. 3 lakh divided by 5. That is 60,000. And check the previous adjustment. What amount Manan is bringing? That is rupees 45,000. So Manan has to bring 60,000, but he is bringing only 45,000. What does it mean? That means remaining 15,000, the gap between 45,000 and 60,000, is to be debited to Manan's account. Now here current account, because you are preparing current, or else capital. Okay? While solving the question, we will do it the same thing, but in advance you can understand that this is a partial goodwill topic. So fifth adjustment again itself. Sixth, very good one. See in this question, some good adjustments are there, like first one, like this, even sixth one, even the second one. Credit purchase of 15,000, which was not recorded in creditor's account and purchase account, but it is included in closing stock. So do tick mark in creditors. Yes, at only one place. Seventh, market value of stock 45,000. Stock of 45,000 is 36,000. What to do? Don't worry at present. Don't go with the effects. Just do proper tick marks. So in stock, adjustment number 7. Liability of workman compensation is 28,000. On liability side, workman's compensation reserve, adjustment number 8. Accrued interest on investment 24,000 is not recorded. Accrued interest on investment 24,000 is not recorded. Okay, so ninth adjustment itself. Now you can do a tick mark in investment also, but I always advise that outstanding interest on investment should be considered as self-adjustment. Yes, because if investment is taken over by any of the partner, if investment is taken over by any of the partner, in that case the problem of investment interest will be there. So better option, if you do self-pick, such problem will not arise. Okay? Now, let's start solving question. A simple one, but at the same time, some good topics, some good adjustments are there. Okay? First of all, the name of partners. Here 3 partners. Prithvi, Princey, and new partner Manan. Okay. Do write the name in full. Don't write just RPN. you are lucky, in that case, definitely they'll give you A, B, C or X, Y, Z. Then it's okay. Or else you have to write the entire name. Prithvi, Princey, and Manan. Okay, let's start from the beginning. First, workman profit sharing fund. As it is a liability, it's a provision, and no adjustment is given, should be on the liability side. But before that, as usual, partners capital. All three name. Prithvi, Princey, Manan. Okay? For current account, don't give such title, because current account may have credit balance, may have debit balance. Okay? So from the beginning, no need to give title. But for capital account, that is 1000% sure, but it is always having credit balance. Then workman profit sharing fund 30,000, no adjustment. Workman profit sharing fund. $30,000. Next one is creditors, good adjustment. Creditors, the amount is 1,20,000. Two adjustments are there. Two adjustments. First, that is the second adjustment, and then it is sixth adjustment. Second adjustment says, out of creditors, 60,000 are payable money, which is to be transferred to his capital account. Okay? So, from creditors, we are not going to pay anything. From creditors, we are not going to pay anything. For that, 60,000. Less transfer to capital account. $60,000. So remaining is 60,000. Okay? Then the second adjustment. Then the second means not second, actually second on creditors. Adjustment number 6. Credit purchase 15,000, which was not recorded in creditors account. So unrecorded. 15,000. Outer column 75,000. Okay. Transfer to capital should be in capital. Unrecorded should be obviously in creditors. That is revaluation account. Here liability plus. So should be on debit side, plus on straight. So 2 unrecorded. Purchase you can write, creditors you can write. $15,000. Is there any problem? About the 60,000 we are taking over here. We are taking. After taking balance, we are going to write over here. In particular, this line. Okay. Now, workman compensation reserve. If you want to do the effect of this, then we can take balance first. Capital account. Let's take it first. 60,000. Otherwise, we may skip that. We may forget that. 1,20,000 and 90,000. 1,20,000 and 90,000. Okay? Now, Manan will bring his personal furniture of 75,000 as capital. Okay? And credited transfer to Manan's capital. So, buy furniture. $75,000 and buy creditors $60,000. Now you may feel, sir, why it is on credit side? Very simple. Liability side minus always cross. Instead of evaluation, they say normally if creditor is not payable, we used to write in the evaluation credit. But here they say that it is to be transferred to capital. So instead of evaluation credit, we write on the credit side of capital account. Is that clear? Okay. Now here furniture is there. Obviously the second effect again. For creditors, one effect over here, second over here. Furniture, one effect we did over here, second obviously asset charge. Furniture, 75,000. Even in the bracket you can write Manan. If you want to write that who brought this furniture. Okay? You can write that also, it's valid. Again, take care for all such adjustments. These are the good adjustments. Then workman compensation reserve, liability side the same. Workman compensation reserve. The amount is 60,000. And they say that liability is 28,000. 28,000. First of all, 60,000. What they say? Liability is of 28,000. Means 28,000 should be in the outer column. So let's distribute it to partner. How much? 32,000. And the balance is 28,000. Is there any problem? Sure. That 32,000 distributed to partners. Take care. Must be in current account only. In old ratio. Old ratio is 5:3. Okay? So first of all in current account. Buy balance brought forward. Because in the question it is given current account 1,50,000, 1,95,000. Okay? Then the distribution of workman compensation reserve. Workman compensation reserve. 32,000 distributed in 5:3. Use calculator properly. Okay? 20,000 and 32,000. So here we computed the entire liability side. Workman profit sharing fund, we already wrote. Creditors with good adjustments we completed. Workman compensation reserve we completed. Current account we wrote the balance. Capital account we wrote the balance. Okay, so liability side is over. Next, asset side, very very simple. Started from bank, 60,000. So 2 balance brought forward 60,000. Then debtors 90,000. No adjustment. Debtors 90,000. Store good adjustment 60,000. Now they say, take care, go through the adjustment first. Read the adjustment. Stop off. Read the adjustment. Try to understand what they want to say. Try to understand what they want to say. Stop of rupees 45,000. Stock, market value of stock of 45,000 is 36,000. What does it mean? What does it mean? Very very simple. If you just follow the adjustment words, in that case, they are clearly saying that stock is reduced by 9,000. Okay? Because what about the stock of 15,000? Because clarification of 45,000 is given. What about the remaining 15,000? Whenever there is no clarification, it is normal. No change in that stock. Okay? So here, stock 60,000 less reduced 9,000 and 51,000 in outcome. Again check it. Market value of stock of 45,000 is 36,000. Means 9,000 reduced. All other no instructions are there. So we also have to reduce 9,000 rupees only. Any problem? Okay. Because stock reduced less should be over here to stock 9,000. Is that clear? Check twice. Next one, building 450,000, no adjustment. Building 450,000. Investment 1,05,000. As I say, here it's okay if you take adjustments of accrued interest in investment, we can do it over here. But not advisable. Better option to stick to a particular pattern. And that's why I say that accrued interest on investment always should be considered as self-adjustment. You can go through past questions. In one question, they clearly say accrued interest on investment. But in that question, investment was taken over by a partner. So net, investment value is 0 in that question. If investment value is 0, what to do about accrued interest? So better option, if you consider that adjustment separate, no such issues will happen. Okay? So I advise you that. So investment. How much? We are not considering adjustment over here. 1,05,000. Here we end the question balance sheet. Here we end the question balance sheet. Now what to do? Very simple. Accept new partners' capital and goodwill other adjustments are there, self-picked adjustments. First of all, solve it. Here, first adjustment of new partner's capital. So we are not considering. Actually, we already considered, but in normal case, we are not considering this. Third adjustment, Manan will be given 1/5 share. Again, we are not considering at present. Fourth, Manan will bring 45,000 as goodwill. Again, we are not considering because of new partner's capital and goodwill. Fifth, goodwill of the firm. Again, not to be considered. At present, what I have to say. Then ninth, accrued interest on investment. Yes, you have to consider it at present. Here, outstanding interest is a kind of receivable income, should be on the asset side. Okay? Outstanding interest on investment. How much? 24,000. Second effect, asset increase. So, credit side plus straight. So, by outstanding interest on investment. Rupees 24,000. Okay? Any problem? Now only new partners, capital and goodwill related adjustments are left. Should be like that. What to do now? New partners capital, goodwill. No. Normally, what we are doing, what we used to do, yes, that one. Here, we are going to close revaluation account first and transfer profit or loss on revaluation to partners current account because current account is there. Okay, so let's do the total here. Fortunately, total remains same. Exceptionally, such thing happened, but here there is no profit, no loss on revaluation account. So naturally, no need to transfer any more here. Okay. Now, about the new partners, capital and goodwill. First of all, capital. First adjustment. See, we already completed that effect, but must be understood properly. Manan will bring his personal furniture of 75,000 as capital. Okay? What do we mean by capital? Goods, 11, chapter 1, terminologies. Yes. Goods, money, assets or services brought in the business by owner. The monetary value of it is known as capital. And reverse of it, that is drawings. Okay? Here we are talking about capital only. So goods, money, assets or services. Here furniture is asset. Okay? So asset is bringing in the business. So in capital account, if it is bringing cash, we used to write by cash account. If it is bringing furniture, we have to write furniture. Very, very simple. 75,000. And because furniture comes in the business, in balance sheet, furniture 75,000. Okay? Normally he used to bring cash. So we used to write over here. But in this case, he is not bringing cash. Okay? Is that clear? Next topic. For the capital only. Our second adjustment. Out of creditors, 60,000 are payable to Manan. Out of 1,20,000, pay normally. We have to pay 60,000 to Manan and other 60,000 to outsiders. Now here we are admitting our creditor Manan as a partner. So what Manan say? Instead of paying that amount to me, that 60,000, consider that as my capital. See, it's a good topic, so I'm explaining in detail. Okay? You just imagine, think that if we paid to Manan, apne Manan ne paid kari diye. So can I say our cash goes out and creditor decreased? Okay? Now, her Thayo, we paid to Manan, and Manan, the same amount, age paisa, from capital tarike lai aave. Manan will bring the same amount as capital in the firm. So what will happen? First, from creditors, we transfer to cash. And then from cash, transfer to capital. Instead of via cash or bank account, directly he said that cancel that creditors and transfer to capital. Very simple. Other way to understand it is transfer to capital minus cross means credit like we are doing normally, but instead of evaluation, they clearly say it is capital. So in capital. Okay? Is that clear? Sure? Good. So two effects, one in capital, one in credit. Here two effects, 75,000, one in capital, other is furniture. Okay? Next one. Manan will be given 1/5 share. Now actually no need of this, but here total goodwill is given, so we have to find out on the basis of this information 1/5. Goodwill in firm, Manan will bring 437. Manan will bring 45,000 as goodwill, 45,000, and then say that total goodwill is 3 lakh. First of all, Manan is bringing 45,000. So we already closed this. So let's do it. 2 in cash is bringing. So cash account on this side. 2 premium for goodwill 45,000. Okay. And the same is to be distributed to partners. Here no new ratio is given. So obviously old ratio and sacrifice both are same. Okay? Old ratio is 5:3. So the same by premium for goodwill. Okay? In current account, take care. 45,000 should be distributed in 5:3. So it is 28,125 and 16,875. Okay? Please do use your paper, just don't do copy from this. Clear? 45,000 will be distributed. But the question is, total goodwill is 60,000. And Manan is bringing only 45,000. Okay? What to do? Here let's do the calculation. First of all, Manan's share of goodwill. Let's do it. Total goodwill. Working on total goodwill equals to 3 lakh. So Manan's share of goodwill equals to 3 lakh into his share 1 by 5 equals to 60,000 rupees. Is that clear? Check once. Here total goodwill is given. As I say, whenever total goodwill is given, and partner's goodwill, that is, new partner is bringing something in goodwill, always partial goodwill topic will be there. Okay? Now he should bring rather 60,000. But the same we are continuing over here. Manan's goodwill equals to 60,000 less he brought in cash 45,000. So the remaining 15,000 directly we are writing the effect debited to his current account. Okay, because current account is there, or else it should be in capital account. Clear? As I say, you have to do this working notes. Not only that, because you are our student, we are going to do journal entries also. Okay, as usual, in each and every page. Clear? First of all, for this 15,000, very very simple. In sacrifice ratio of old partners. So by we did these things for 2 times. Both the times I gave you that working on that journal entry also. So try to refer that. By Manan's current account. Into bracket you can write goodwill also. Okay, if you want to write 9,375. This 15,000 we are transferring in 5 is to 3. 9,375. And the other one 5,625. Same on debit side. 2. Rupees current account in Manan's column. 2. Prince's current account. Okay? Here we did the entry. Nothing in cash. Clear? In cash already 45,000 is there for premium for goodwill. Anything else required? Check twice, because now it's a time to do the totals only. So check twice. Be वक्त जोई लो कोई चीज़ की problem. Want to revise? You can. This is the biggest advantage of this online system. Okay? Anything required? If not, then let's start doing totaling. First of all, total of capital accounts, because we prepared it. Okay? Very, very simple. 1,20,000, 90,000, the total properly, huh? The same total over here. 1,20,000, 90,000, and 1,35,000. Nothing naturally, so 2 balance carried forward. 1,20,000, 90,000, and 1,35,000. Same partners capital. 1,20,000, 90,000, 1,35,000. Overall total, that will be 2 times 345. Okay, 3,45,000. Is that clear? Now it's part of current account. Again the total. Here naturally credit side is bigger one. Okay, very simple. On debit side nothing is there. 2,07,500. Same total, 2 lakh. Okay, balance. 2 balance. Carried forward. For principal also, it is 2,29,500. 2,29,500. If you feel this handwriting is a bit smaller one, sorry for that. Do not have any argument because of the size, but use your calculator so you get the same amount. 2,29,500. Same over here. Okay, but in Manan, credit side nothing is there, debit side some amount is there. Okay, so total 15,000. Same total over here, and here the balance should be by balance carried forward. In current account, as I say, in current account, there are so many chances that you may have closing balance or even opening balance as debit or credit or on both the sides. Yes, for a single partner, both balance is not possible. But naturally, for 2 or 3 partners are there, 1 or 2 may have debit balance, other may have credit balance also. Clear? Now, let's write the same in balance sheet. Here, these 2 are on debit side, so on the liability side, rupees current account, $2,07,500, and Prince's current account. $2,29,500. Okay. Now, on this side, on asset side, Manan's current account should be 15,000. Is that clear? Don't bother about the place. I will adjust everything. Here is there any problem? Now, total of cash of bank account 1,05,000. Very simple. Same total 1,05,000. Same balance by balance carried forward, and the same cash or bank account, that is 1,05,000. Is there any problem? Just to check it. Meanwhile, I am just doing little bit adjustment for the totaling, nothing else. And just removing this. Don't worry, I am writing the same, but little bit at lower place. Okay? So no need to take tension for totaling or anything like that. Here, the working norm, but let me have the place for total. Okay, now the same working norm. Manan's goodwill, Manan's share of goodwill, 60,000 less he brought in cash 45,000, so 15,000. Okay, that is debited to his current account. Is that clear? Okay, and everything else stays for totaling also. Check once, twice. Is there any problem? Is there any problem? No. Good. In that case, the total will be 9,15,000. 9,15,000. Check twice. Check twice. If you do not have any problem, in that case, at the end, let's go with the journal entries. Check twice. Is there any problem? Okay. Then let's go with the journal entries. Let's go with the journal entries. First of all, for capital of new partner. Yes, capital of new partner. Even from the ledger you can prepare that entry. Furniture account debited. Furniture account debited 75,000. Creditors account debited 60,000. Furniture account debited 75,000. Creditors account debited 60,000. Premium cash account debited 45,000. Again, furniture account debit 75,000. Second one is furniture debit 75. Second is yes, creditors account debited 60,000. Then cash account debited 45,000. To Manan's capital account. To Manan's capital account 1,35,000. To Premium for goodwill account 45,000. Very simple. Okay? Second, do consonant in the entry now. Second, premium for goodwill account debited. Premium for goodwill account debited 45,000 to Ruthvi's current account, not capital. Ruthvi's current account 28,125 to Prince's current account 16,875. Again, any problem? We did for 3, 4, 5 times. So I don't think so there's any issue for this. In the last one, yes, we are debiting Manan's account and crediting between Prince's account for 15,000, which he is not bringing. Okay? So the entry should be Manan's capital account debited. Manan's capital, not capital, current, I'm sorry. Manan's current account debited 15,000. Manan's current account debited 15,000 to Ruthvi's current account 9,375 to Prince's current account 5,625. Is there any problem? Here the journal entries were. Again, for capital, it's a good question. Take care twice. Specifically, these adjustments do solve properly. Clear? Because maybe possible now onwards, whatever the tough adjustments you may have, but the new partner is bringing assets and liabilities and such kind of adjustment will not be there. Okay? So we can't do so many practice. So the only option is you have to solve this question, this particular topic 3, 4, 5 times at frequent interval. Okay? So here we end today's session. Next time with question containing a specific topic of closing capital. Okay? Till then, take care of yourself, have a nice time, and stay happy, stay safe.